you so much, Samantha, and welcome once again to all of the attendees. We have an excellent discussion lined up for today. We're going to get an up-close look at the impact of cloud technology and networks on supply chain finance. Specifically, we'll hear how some banks and corporates are doing things a bit differently today, using new tools and collaborative models. With us is Kurt Cavano, Chief Strategy Officer at GT Nexus. Kurt has over 25 years of experience helping corporations improve their business performance through the intelligent application of technology. He is a founder of TradeCard, which merged with GT Nexus in 2013. Prior to founding TradeCard in 1999, he was a vice president at American Management Systems, an international business and information technology consulting firm. Kurt managed the corporate banking practice of the AMS Finance Industry Group. Featured as one of the World Trade Magazine's 50 most influential people, he is frequently a speaker and writer on topics concerning international trade and global supply chain management. Thank you so much for joining us today, Kurt.
Thank you, Tarika. Happy to be here.
We're happy to have you. Before we dive into our conversation, can you, Kurt, give the audience a quick background on your history in the supply chain finance world? Many of us see you frequently at events speaking on this topic, and you've written on the subject for years, going back to your days at AMS. Tell us how you came to embrace the topic of supply chain finance and what has led you to rewrite the way things are being done in the global trade.
Well, that's a pretty broad topic, but let me start by just saying that prior to starting TradeCard, I spent 15 years at American Management Systems, and as you said, I ran the corporate banking practice. And what we did there was we built the systems that many of the banks around the world, actually 30 of the top 50 banks in the world, use for managing letters of credit, collections, foreign exchange, and cash management. And so I spent a lot of time working with banks to see how can we optimize all those processes. And in 1999, we had the idea for TradeCard, which was to think differently about some of those processes and automate them from a corporate view and then wire the banks into the process. And we got started as a concept and came out of the dot-com bubble and survived all that and really transformed the way people thought about supply chains for letter of credit and for cash management and how do you actually manage the data and the finance. And then a few years later, we realized that there was a real need for injecting capital into the supply chain, and so we went down the road of actually building out supply chain finance capabilities and really took a social media kind of a view of the world, you know, that it was, in the day it was called a hosted ASP, and now it's turned out to be what they call cloud computing. So we got very lucky as picking the technology right and saying, you know, we need to build this in the cloud or build it in a hosted way. And that evolved into the company called TradeCard, which then, as you said, merged with GT Nexus. And one of the things that we think we've really focused on is in the supply chain, you know, it's easy to say, oh, we had all these great innovations, but I think the thing that we did best was really listen to our customers and say, what are the pain points that you have? What are ways that you think we can improve this? And that's been how we've built the company over the last 15 years, is listening very, very hard to all of our corporate customers, to our banking partners, to the LSPs, the logistics companies that work with us, to say, what is it that is causing you pain? How can we do it better? And that's how we built the company, which is now GT Nexus, with over 25,000 customers in over 65 countries, and we're very, very proud of what we've been able to build out.
Wonderful. It sounds as though you're doing many great things. So I have a few questions for you. Our first question today is, How do you define exactly what is supply chain finance?
Well, I have kind of a different view of supply chain finance, which is any kind of finance that you can inject into the supply chain at multiple points to actually make the supply chain safer, make it more robust, and make it able to operate more efficiently. And you know, there's a lot of different ways people look at, you know, whether it's factoring or whether it's dynamic discounting. We look at it much more broadly in the sense is that, you know, how can we bring in that finance in different ways so that the supply chain can be more efficient, and how can we make it so that everybody benefits? If there's a financial institution involved, so they benefit. If there's always a corporate involved, how do they benefit? The buyer, the seller. But really, it's about using finance to strengthen that supply chain and make it more efficient. That's kind of my view of the world.
So, following up on that question, what does the supply chain finance landscape look like today?
Well, there's a real lot of people that are working in the supply chain finance area and working in different ways. There's corporations that are using a mix of ERP and bank and third-party software providers, and really focused on early payment programs, or what we would call reverse factoring. But we believe that that's not quite enough to be effective. There's some providers offering a full suite of services like letters of credit and financing, and work directly with one particular bank. So a corporation will say, okay, I'm going to work with this bank for my letters of credit, financing, etc. But the downside we see there is that you're tied to that bank, and not that being tied to a bank is a bad thing, but things change and banks want to do things differently. Credits change, and you're kind of stuck in one place. And the suppliers on the supply side of that, when people are doing business that way, have to use a different portal for every corporation that they deal with. So if you're shipping to 10 different corporations and you got to deal with, you know, 6 corporations that have supplier portals, and they're all different, and it makes it very, very challenging, and you end up with a world of one-to-one connections between buyers and suppliers and financial institutions. So, you know, it's a complicated world. We're also seeing some third-party cloud providers that are just focused on the invoice discounting. And it comes back to my belief that to optimize the cost of capital and to truly leverage, you know, the value of supply chains and the supply networks that are being built, you need to offer a variety of services: pre-export shipment, post-export shipment, finance, early payment programs. And most importantly, you need to give transparency to all the parties so that everybody, whether you're a buyer, a seller, a logistics company, a bank, can have visibility into the movement of the goods and see what's going on. And I think that's a tough landscape with a lot of different options out there that corporations have to choose from.
So how is the cloud technology changing the face of supply chain financing?
Well, I think that the thing about cloud that makes this very, very powerful is, one is it's neutral against everything. It's bank neutral, it's ERP neutral, it's logistics provider neutral. It gives everybody a place to connect. And you know, if you think about the early days of credit card, when you went into, if you're old enough to remember, Tarika, I think you're too young, but I remember when you went into a store, there was different terminals for different cards, and now it's kind of all uniform. One terminal processes all different cards in all different ways, and cloud takes that kind of approach, which is you connect once, and it allows you to get access to all of the different capabilities that are out there. So it connects everybody in one place, and it gives everybody a single view of the data. And think about Facebook is a great analogy here. In the old days, we used to take pictures and email them around to our friends. And if you wanted to change the picture or send another picture, you had to send a whole other set of pictures. In Facebook, you post that picture out there, and all your friends get to see instantly. All the people that are part of the transaction, if you will, get to see instantly. And that's what cloud gives you for the supply chain, is that instant access to the latest version of everything that's going on in the supply chain. And that's really, really powerful. So everybody has visibility, and that includes not just the buyers and the sellers, but it includes the financial institutions that are providing finance into that transaction. So it's much more secure and much more real-time truth about what's actually happening in the supply chain. And that's the real power, as I see it, Terika, with the power of the cloud.
So diving in a little bit deeper, Kurt, what are the advantages of managing the physical and the financial supply chain together?
Well, I think that there's a lot of things here, but the reality is when you tie together the physical supply chain with the financial supply chain, the fact that payment is tied to the movement of goods means that people provide better data, and it's this kind of self-cleansing process, which is, if you're going to get paid because your electronic invoice matches electronically to your purchase order and the shipping information is correct, it allows everybody to, and enforces everybody to give better data about the transaction. And when you have better data about the transaction, you can do more things, and things are going to be a lot more accurate. So I think that's one big piece of it. The other piece of it is that you need, by having it all tied together and having visibility into the whole life cycle of the transaction, it allows financial institutions better clarity about when they can lend money. So, for example, you can see exactly when the purchase order was arrived and what the amount was. You can see all the amendments to that purchase order. You can see when the raw materials were ordered. So you can say, hey, do I want to lend against those raw materials? You can see when the shipment is done. You can see exactly when the shipment, the invoice was processed, and the buyer says, "Yep, this is all good. I'm going to pay it." And you can do post-shipment, or kind of reverse factoring finance. But it gives everybody complete visibility into that. And because we start the process not with an invoice, but we start it with a purchase order, we're providing tools that really drive compliance around that data. So we reuse the purchase order to create the invoice. We reuse the invoice to create the shipping information. And that reuse of data gives complete visibility for everybody, and very, very accurate visibility, as I said. And that, again, because you have that visibility, you can do the whole idea around financing at different points in the supply chain. The other piece of this, which is what we've been able to do specifically at GT Nexus, is we've been able to create a legal framework around this through our membership agreements. So buyers and sellers agree to interoperate using this legal framework. So the buyers, much like a credit card arrangement, if you will, that there's issuers of cards and there's people that hold the cards and merchants, they're all tied together through a contract. The buyers agree that if the system says it's okay to pay, they're going to pay, even if there's a commercial dispute outside the system. And that certainty around payment gives the financial institutions great clarity into the fact that they're going to get paid at the end of the transaction. So they can be much better and lend more money because they know exactly when they're going to get paid. And the other piece of it is, when we do the payment, when the buyer ships or the supplier ships, we match it together, it's okay to pay. And if a financial institution's actually paid previously, early payment, the system knows that. So instead of the supplier getting paid and have to repay back to the buyer, or repay back to the financial institution, the system actually automatically repays the financial institution, and that really minimizes the financial institution's risk. And so all that automation and tying the physical and the financial together really reduces risk for everybody and allows us to be more aggressive about lending into the supply chain.
Thanks so much, Kurt. So let's talk a little bit about the buyers. What type of programs and benefits should manufacturers and retailers expect to obtain through supply chain finance in the cloud?
Well, there's a whole set of things. First and foremost is accounts payable automation, and the ability to issue your purchase orders electronically, get your invoices electronically, match it together, and do the payment automatically. We have great examples like Columbia Sportswear that does about $800 million worth of purchases on the platform, and they have 1.5 FTEs in their accounts payable department. Great example of how you can save a lot of money. Chargeback and deductions management. You order 100, they say they ship 100, you pay for 100, you open the box, there's 99. You can automatically capture that data, attach it to the next payment with a reason code so that there's great clarity around what the chargeback was. There isn't a dispute around it. The supplier knows why he's getting charged back, and the buyer, because it's a lot easier, captures more of those discounts when they're appropriate. And then automated workflows. You can route things around to different people so that if you need multiple approvals, you get all of that done electronically. And so it really speeds the whole approval process for everything, for the orders, for the invoices, for the payments, etc. And then by linking the buyer and the seller together, in many supply chains, you have very large buyers and then smaller suppliers. And those small suppliers are in remote markets where access to capital is very difficult and very expensive. By tying the transactions together, you can offer supply chain finance into the supply base at rates that are based on the credit of the buyer, not on the credit of the supplier and not on the market as it is in places like India or Pakistan or even China, where the rates can be very, very high. So it really brings that financing in at a better rate. And discount programs that I talked about, it allows, if a buyer wants to fund their own discount program for the full amount or up to a certain amount, they can do that and they can capture discount. And it creates a real fundamental tool for collaboration. So, we typically think of, a lot of buyer-seller relationships as being adversarial, and what we want to do is get them onto the same platform, get them collaborating, bring them together so that they can be more efficient. And that collaboration and that taking all the paper out makes the supply chain much more efficient, much faster. You can order closer to the shipment times. You can get better visibility into what's selling, and there's a whole bunch of savings around that for the buyer. And it just reduces the risk for everybody, because if you think about late shipments, the biggest cause of late shipments is raw materials were ordered late. And why were they ordered late? Because they didn't have the proper financing in place. So if you can inject financing in, the raw materials are going to be ordered on time, shipments are going to take on time, so the buyer's going to get the goods they want. And that's a huge advantage. So those are kind of the high-level advantages that I see for buyers and retailers, etc.
So how exactly does this play into and complement the physical supply chain?
Well, I touched on a bit of that already, but it really dovetails into kind of work in progress tracking. So one of the things that we do is you're not just tracking, here's an order and you don't have any more visibility until it ships, is you actually, through the platform, get visibility into work in progress events. I've ordered my raw materials. The raw materials have been delivered. I've begun production. If I'm doing electronics, my sub-assemblies are here. If I'm doing clothing, I've got the fabric and I've cut it and I'm about to sew it. And giving that visibility into the transaction really allows people to have better control of when things are going to get shipped. And if they're going to ship late, you learn earlier in the process with that, with what's going on. So it's about having that really good view into what's going on, and then it allows you then to collaborate better on the financial side, early payment programs, all that kind of stuff, which then again, as I said, it brings the parties closer and closer together. So we see this tie of physical and financial being this kind of never-ending loop of continuous improvement, better data, better visibility, better finance, which makes you more efficient, which allows you to go faster, and it keeps getting better and better. Obviously, there's a point at which there's diminishing returns, but for a lot of our customers, they're able to cut weeks out, and in some cases, months out of their supply chain. So it's very, very powerful.
So, Kurt, could you briefly give attendees just a scenario of someone doing this today?
Yeah, and I mentioned Columbia Sportswear. They're one that's been a real innovative partner with us, and kind of have everything. It seems to be everything that we build. They use. And so, for example, we take purchase orders out of their SAP system. We feed them into GT Nexus. We alert the vendors that these purchase orders are here. They can collaborate on them and come to agreement on it. And if there's changes, we feed that back into their SAP system at Columbia, and we manage that whole process. And then we're taking work-in-progress signals from the factory floor that say, okay, they've ordered the raw materials, what's happening with all of that. And then we're providing tools that allow them to pack and scan the goods and give feedback to Columbia that say, hey, here's stuff that's actually manufactured. You don't even own it yet. And what that allows Columbia to do is actually get a view to what's available in the factory. So as they're getting orders in from the Dick's Sporting Goods of the world and the Mervyn's and the J.C. Penney's, et cetera, as they're getting those orders in, they can then feed that information right down to the factory floor real time and say, okay, with this set of things that you're finishing up right now, I want you to direct ship that to Dick's Sporting Goods. I want you to direct ship this other package to J.C. Penney. The reds are doing really well. The blues are a little slow. So I can tell from work in progress that you haven't dyed all this fabric. So we want you to do more reds and less blues. And that kind of real-time collaboration between the buyer and the factory. And then as the factory's shipping, the system's automatically creating the invoice, what's called the ASN, which is the Advanced Ship Notification, the packing list, and all that, and feeding that invoice into GT Nexus. We compare it together, and we say, hey, it's okay to pay, and then Columbia runs a self-funded early payment program for their vendors that say, do you want early payment? And it gets a pretty good take-up. And what's really interesting about that program, which I love, is if you go talk to the treasurer at Columbia, if he's getting 50 basis points in the banking market for his money on his balance sheet, he's doing really, really well. With this program, he charges his vendors 4 or 5% APR, which is 500 basis points, on the money, and the vendors are happy to get it because they have to borrow at 10% APR in a lot of these markets like Vietnam and China. And so it's this kind of crazy win-win where the treasurer used to earn 50 basis points is now earning 500 basis points, and the factory that used to borrow at 10% APR is now borrowing at 5% APR or 500 basis points. So everybody is winning through this process, and it's a really great financial win for both of them. And on top of that now, because of that real-time visibility, Columbia is able to get direct shipments right out to their partners like the Dick's Sporting Goods of the world, and it doesn't even have to go through their warehouse or their distribution center. So they're saving on transportation costs, and that cost can be passed on to the ultimate buyer. So it's a real kind of very powerful example of how the supply chain can be improved.
Thanks so much for giving us that insight into the buyer side. Let's just change gears a little, and we did start talking about suppliers. But tell us more about some of the unique ways suppliers can benefit today in a supply chain finance program when they're using the cloud.
Well, we go back to part of the whole, on the buy side, we talk about accounts payable automation. On the supply side, it's just the reverse of that, which is accounts receivable automation. And it's the automation of all the orders and the amendments and just eliminating all that paper so that the supplier has really good visibility. And, in a lot of these environments where you have purchase orders that are amended multiple times, getting to the bottom of what the current status of that purchase order and for a lot of companies can be difficult. So just that of having a very good overlay of an order with all of its amendments and all of its shipments, so you know what's available to promise, available to ship, what do you need to produce. All that stuff is really powerful for the factory. But the other piece is, because of our legal framework and because of the compliance between the purchase order and the invoice and all the other documents that we look at, the vendor knows exactly when they're going to get paid. So they have date certain payment certainty. So, and if you think about cash management, one of the reasons why corporations need to keep buffer cash around is because they don't know when they're going to get paid. Are they going to get paid as planned at 30 days, or is it really 35 days? And with the platform and with the supply chain finance, they have visibility into when the scheduled payment's going to arrive, and then they have the ability to select early payment if they need it. And so we see a lot of suppliers that say, hey, during the my non-peak season, I don't need to take the early payment. I'm quite happy to get paid in 30 days. But during peak season, I have a cash crunch. I want to be able to get that cash without drawing down my line, to be able to get that access when they need it, for the times they need it, at very good prices. And whether that capital is coming from a self-funded program like Columbia has, or dozens and dozens and dozens of our customers use a bank-funded program, and it could be coming from a bank. And so the system is agnostic of where the funds are coming from, but the visibility to that factory and when they're going to get paid, their visibility to access to cash, their ability to understand their cash flow and what their order flow is going to be, because the other piece of it is to be able to look ahead electronically to all of your orders, and just to be able to collaborate better with your buyer. It makes them much more responsive, it makes them much more efficient, which makes them a better vendor, which makes the buyer happy because they have better, stronger vendors, and that means the vendor's going to get more orders, which makes the vendor happy. So it's kind of this all feeding together process.
Thanks, Kurt. How does this play into the big picture of improving the relationship with suppliers?
Well, I think I touched on that a little bit, in the sense that it's by collaborating better, by being a stronger vendor, by having better access to cash and allowing you to be more efficient and be more responsive as a vendor, it makes you a much stronger supplier, which makes the buyer want to interact more. Because at the end of the day, there's, when we buy stuff, we look at cost. But if you're running a global supply chain, sometimes it isn't about a penny or two here, a penny or, there. It is about, do I have a reliable partner that I know that's going to be there in the future, that's going to ship on time, that's going to perform as required. And so this kind of collaboration that takes place between the physical and the financial supply chain and linking everybody together electronically makes that relationship a longer, stronger, and it gives the vendor the opportunity to become a real value partner and perform better. And so the things like packing and scanning, which gives you incredibly accurate shipments so that you're going to make sure that you can always ship exactly what was ordered. Those kinds of things strengthen the relationship between the buyer and the seller, particularly now these days where everybody's kind of trying to deal with this in retail, particularly the whole omni-channel world of having really accurate counts of inventory and what's going on. This visibility into what's happening, and if you've got vendors that are electronically connected, that can pack and scan, that can do all that and get really accurate shipments, you can go direct to customer without worrying about chargebacks. You can direct even to consumer, and we have examples of a couple of our largest factories and largest buyers that ship containers, but they also ship directly from the factory to consumers, custom-made product. And to be able to do both of those simultaneously, electronically and accurately, is a very, very powerful. And it's about connecting them together, and then the buyer, either through their own funds or through banking partners on the platform, literally extending a hand to their partners to say, hey, look, we're gonna help you finance this, by having early payment programs or by having financial institutions that work with us, and it helps reduce costs and makes everybody happy. So it's really about that relationship, and it's really about improving process.
Thanks so much, Kurt. I want to switch gears and ask you a little bit about financial institutions, and I know that you've lightly touched on some of these topics before, but can you go a little bit further in depth on what are some of the untapped opportunities for financial institutions in the supply chain?
Well, one of the things, yeah, I'd be happy to, is we think that when a financial institution offers finance into the GT Nexus platform and into the network, they get access to all this visibility. So if you think about for a financial institution if they're dealing in a paper-based world, or even if they're just getting approved invoices, they really are getting a limited view to what's happening. And so what we love about bringing financial institutions onto the platform is that financial institution that's party to the transaction and brought into a community between buyers and sellers gets to see the orders, gets to see the amendments, gets to see the shipments, all that same data, so they have a real-time balcony view into everything that's going on in that supply chain. So they really can assess the risk of what's happening in that supply chain. The other thing is, one of the big differentiators for GT Nexus over other companies that do approved invoices that you can then do financing is because we can instantly match together the purchase order with the invoice, the packing list, the ASN, and say it's okay to pay under our legal framework, it gives us, for say, a 60-day transaction, 55 days of financing ability. Whereas if you have to wait for an approved invoice to come through a different process, you might not get that approved invoice for 20 days into the process. So instead of having 55 or 58 days of financing window, you only have 40 days of financing window. So the benefit to the FI is great visibility so they can do risk assessment, ability to do longer financings because the transaction is approved much quicker, so which is very, very powerful. And then when we do the payment, instead of crediting the vendor and then having the vendor have to pay the FI, the system knows automatically to pay the FI the portion of the transaction that they financed. And so that takes that risk of collecting from the financial institution out. And this is especially powerful because one of the greatest underserved markets that we've seen is SMEs in emerging markets because it's really risky, it's really hard to do small dollar transactions, and by making it automatic, by making it all electronic, and lengthening the window by doing automatic compliance, those SMEs can be very profitable because the interest rates you can charge can be higher. And so we see a huge growth on our platform in places like Vietnam, India, Indonesia, where people are doing financing on these SMEs that would be traditionally risky markets, and they'd be risky small companies, but the technology really takes a lot of the risk out of it. So we think that is a really big benefit for the financial institutions.
So here's a question for you. Does the intertwining of the physical and the financial supply chain offer any unique opportunities? If so, can you just provide examples of creative financing being deployed?
Well, we just announced at our user conference 2 weeks ago something that we feel is really a new way of thinking about finance in the supply chain. Because we have 100 terabytes of supply chain data on our platform of the history of transactions, we're looking at it not from a credit point of view, but from a big data point of view. So now we can analyze supply chains and say, at different points in the process, when a purchase order is issued, when the raw materials are ordered, when the goods have been shipped, when the payment has been approved, what is the statistical probability that the payment is actually going to take place, and for how much of it? So, for example, at purchase order time, when the purchase order is issued, we know that 72%, and I'm not giving hard numbers, of those purchase orders are going to get paid because there's going to be amendments and there's going to be reductions or increases, etc. And then later in the process, we know a higher percentage and a higher percentage as we go along. And so we're working with a non-bank financial institution right now to say, okay, based on big data, but not based on the credit of the individual parties, at the point a purchase order is issued, I'm willing to, for example, lend 50% of the purchase order amount at an interest rate of, say, 7%. And then when the raw materials are ordered, I'm willing to do, instead of 50%, 70% at, say, 6.5% APR. And then when the shipment takes place, I'm willing to do 85% at a 6% APR. And then once the payment's approved, I'm willing to do 100% at LIBOR plus 300 basis points. And that, I'm kind of making up the numbers here, but you can see the trend here. And it's not based on credit, it's based on big data analytics of what's actually taking place in our supply chain data that we can see across hundreds of different companies. And then on top of that, and this is where it really starts to get magical, is then to take all those financings, pool them, and securitize them. And so allowing us to get access to financing in the capital markets or banks that want to come in and be part of a syndicate to actually do syndicated or securitized financing. And that gives us access to cheaper capital, and that then gets injected into the supply chain at a cheaper rate, which is good for the supply chain, which makes them stronger, which means they perform better, and that actually improves the risk. So it's this kind of virtuous, again, the virtuous cycle. So we're piloting this now, and this is something that we think is going to be huge. And what we're really excited about it is when we started talking to vendors that weren't even on the platform, we said, look, if we could offer a purchase order finance at these particular rates, they were saying we would ask our buyers that buy from us to come onto the platform just so we can access this capital, because right now the access to capital for SMEs and even middle market companies around the world outside of the U.S. market is really challenging for some of them. And so we believe it's going to drive adoption and increase our business. And so we're really excited about this. And we're going to be looking for more financial institutions to join in with us as we securitize this or syndicate it out. So that's an example of taking a very different view of supply chain using big data analytics rather than using credit analytics. And that's we think could be a real game changer. And so you're thinking about it like credit card securitization and how you could securitize all those receivables. Why can't you do the same thing in supply chain? So there's a good example for you, Tarika. We're really excited about it.
Wonderful. It sounds very exciting. So, Kurt, much of what we are alluding to today is that the old perception of supply chain financing is outdated, and the new way of doing things, and the old way, of doing things is stale. What's enabling this disruption, to use the zeitgeist words of the year, and changing the way that buyers and suppliers and finance providers are viewing supply chain financing?
Wow.
I know, it's a big question.
Yes. I've been doing this speech called The New Machine Age, which I did at the keynote of the American Apparel Footwear Association, and I just did it at our user conference, and I've been asked to give it in a couple of different places around the world. And what I talk to is technology as an enabler is disrupting every business. You know, you look at how Warby Parker is disrupting the eyeglass market. You look at how Rent the Runway is changing the way young women look at buying clothes. Instead of doing it by buying it, they're renting it. You take a look at a whole bunch of these other companies. There's a company called BarkBox where you can order your dog supplies online and have them delivered the next day. There's this incredible technology disruption that's taking place, which is forcing rapid change on company supply chains. And this disruption is not going to stay steady. It's accelerating at a very rapid rate. And it's making all kinds of new companies pop up. And the incumbents, the people that are out there, have got to become much more agile in what they're doing. And I think as old-fashioned as supply chain finance may be, as it may sound to some people, really these progressive ways of using financial tools and technology tools to allow buyers and sellers to collaborate together, this is so necessary, because if buyers want to be able to compete in this crazy new world where all these new startups are popping up and changing things, they have to be more agile. They've got to have supply chains that are much more efficient. They have to be able to react to direct-to-consumer shipments, the whole omni-channel thing. And it is not that supply chain finance is going to fix all that, but it's one of the tools in the toolkit about making your supply chain more agile. And this is something that every company needs to be focused on. How can I do things faster, more efficiently, more cost-effectively? Can I ship directly from the factory to the end consumer? Can I avoid my distribution center? Can I do all those kinds of things? And supply chain financing, good supply chain technology are driving that, because if companies can't compete with these new young upstarts, they're going to be cannibalized, and they may not be totally cannibalized, but they'll see the highly profitable pieces of their business picked off by these young upstarts. And so just thinking about your supply chain as a weapon and how you could be more efficient and how you can drive out costs so that you can compete in this new world, supply chain finance and this technology is a key component of this. And it's not enough to think about, I'm just going to wait for approved invoices and do some financing. You have to think holistically about, how do I make the supply chain more efficient? And that's, we think, is the real key in this crazy new world we're living in.
Wow. What a great answer, Kurt. Technology as an enabler is disrupting the way we do business. I think I'll frame that on my wall.
So it's disrupting the way we do business, and it's enabling people to compete, and people that stay around have to embrace that same technology or better technology. It's a technology war right now. It really is.
Got it. Well then, I want to ensure that we leave some time for questions at the end. So the final thing that I just want you to talk about, Kurt, is just to give us a really quick description of the GT Nexus network and how it connects finance providers, buyers, and suppliers.
Well, it's never just about the technology. We kind of look at it as layers. One is kind of this platform that we've built, a bunch of applications, a whole set of applications that, from transportation to procure to pay to factory management, all that kind of stuff. But the third layer of this whole thing is our network. So a pre-connected network of 25,000 plus suppliers that are doing business, of hundreds of logistics providers, of dozens of financial institutions, all connected in and instantly able to be on and transacting, all brought together on that platform. So in one place, buyers, suppliers, financial institutions, logistics companies, freight forwarders, everybody has a real-time, single view of the truth, down to the transaction level. So I can answer that question, because in global trade, there's only two questions that matter. where's my stuff and where's my money? And you can answer that in a self-service mode, real time, and we are so proud to have built a platform and a network that enables some of the biggest supply chains in the world to do business, ranging from Pfizer to Caterpillar to Levi's to Adidas, all of them running their supply chain on top of what we do, ranging from mining equipment, going to giant mines in Africa for Caterpillar, to jeans being manufactured in Mexico and delivered to consumers in the U.S. And so it's that network and that ability to do that for all those people that we're really, really proud of. And I like to say that we don't have customers, we have fans, and they press the like button every day on what we do for them. And when you can talk to some of our customers about what we're doing and how we're strengthening their supply chain. So that's what we do at GT Nexus.
Great. Thanks so much, Kurt, for that insight. Let's go to some of the questions that we have received from our participants. Someone would like to know, Kurt, how you see the impact of the SWIFT BPO initiative on supply chain finance cloud options. What do you think that impact is going to be?
I am so pleased that the BPO is finally there. And a little history, when we first started TradeCard in 1999, now GT Nexus, all my banking buddies, and I have to say, I spent most of my previous career, as I said, building software for the banks, said, oh, just wait for Bolero, and you'll have a tool to be able to do this. And I told them, I said, look, we're going to build this out, and when Bolero comes, we'll work with it. We feel the same way about the BPO. And we think that it's a really great concept about having this contingent payment that you can actually do that's like a letter of credit, but it's not a letter of credit. I mean, that's essentially what we built with our technology 15 years ago. And so as that stuff catches on, we'll be happy to interoperate with it as required. And as people ask us for it. We haven't been asked to deal with that yet, but as people ask for it, we will. And I know they've done a few transactions in a few markets, and we think that that's pretty cool. And for me, it validates what we did 15 years ago when we created TradeCard, now GT Nexus. So it's validation of that thinking. So I'm very pleased that SWIFT has gotten there now.
Great. So also, do you think suppliers would want to share the real-time information with their buyers? Changing gears a little.
Do they want to? Yeah, they do want to supply real-time information. It's about strengthening that relationship again. So for buyers to be able to say, if a supplier can give me real-time information, real-time visibility into what's going on the factory floor and what I'm doing, and I've ordered my raw materials, it makes the buyer more comfortable that they're going to ship on time, or if they're going to be delays, they're going to know earlier in the process. And that real-time sharing of data makes the relationship much, much stronger. So yeah, we see it all the time that suppliers are sharing that data.
Got it. So here is a question that certainly has greater significance, especially in regards to a lot of the information and news that we're getting about cybersecurity and just how to protect your business and your interests. Banks take extensive steps to ensure security in scenarios such as this. How does a software provider like GT Nexus compare to the robust infrastructure of those major players like banks?
Okay. First of all, we're not a bank, and we do all of our money movement through banks. So companies like Citibank, Deutsche Bank, JP Morgan Chase, moving our money. So we want to make sure we never become a bank because of the regulations that go around that. So we're very careful about how we manage the process and what we do. And we see banks as essential partners to what we do. Given that, though, we still are very, very careful to do a number of things. One is, on transactions, we run all of the OFAC-like testing, which is not just OFAC, but it's all of the different Interpol databases. I think there's 26 or some number like that. I don't know the exact number. Every time a purchase order is issued, every time somebody joins the network, every time an invoice is issued, every time we make a payment, we run all the data through all that to make sure there's no bad guys in the transaction. That's something we do even though we're not required, but we do because we want to make sure we're keeping our customers out of trouble. So we do all those things. We also follow all the rules around Know Your Customer. So, for example, as customers join that are going to be getting payments, we get a physical signature, we go to their site, we make sure they're real people. We do all of those kinds of things as well. So the kind of banking things that we do that we don't have to do, but we do it because we know it's the right thing to do. The other thing is everything on all the messages that are flying around the world on our platform are all encrypted for security purposes. And then anything involving a payment or a purchase order, an invoice, requires an additional form factor of security. So you not only have a user ID and a password, but if you're going to do an invoice or approve an invoice or do a payment or approve a payment, you have to then use a physical device that gives you a one-time electronic password that we do that. So everything's encrypted, and the password protection gives us authentication, and we authenticate all messages as well to make sure that nothing's been changed inside of them. And then we have all of the security. We also go through the SAS 70 audits and all of those kinds of things that you have to go through to make sure we have all the proper processes in place. So while we're not a bank and we're not held to all those regulations, we are very, very rigorous about making sure that we're doing everything we possibly can to, one, protect our customers, two, to protect the data, and three, make sure that we're not allowing any of our partners to run afoul of the law. So that's kind of how we look at it.
Great, and that's something that I'm sure attendees would be pleased to hear.
I hope we spent a lot of money doing it.
So I have one final question from the audience that I'm going to ask you, Kurt, and that is, how does a company that is providing securitization of trade finance receivables become involved with GT Nexus?
Send me an email, kurt.cavano@gtnexus.com, and we'll bring you into the conversation. Would love to talk to you about it because we think that this is the next area. We're processing $100 billion of transactions on the network, and we think that there's a huge opportunity for this kind of processing. So would love to engage anyone in the conversation, and so send me an email, and we'll get you included in the conversation. For us, the banks are key for us here, the banks and the non-bank financial institutions. We have dozens of them that work with us, so we're looking for as many partners as possible to bring on other innovative financial services that only banks and other FIs can offer. So we'd be pleased to have some more on.
Wonderful. Thank you so much, Kurt, for this wonderful and great discussion. I know a lot of people, they hear so much about the cloud and how it's changing or disrupting the way that business is being done, but oftentimes they're still left with many questions about what it may mean for their own business. So we really appreciate you sharing your great insight and just letting people know more about the world of supply chain finance and the cloud and how those two are interconnected and related and how they can work together. Thank you.
I appreciate it. And as you probably can imagine, there's nothing I enjoy more than talking about our business. So I'm happy to oblige. Thanks for having me.
Wonderful. Thank you so much, Kurt, once again, and thank you for the audience for joining us today. It's been wonderful. Just as a note and reminder, there will be a replay of the session available at GT News and at the GT Nexus website in the coming days. Thank you once again, and have a wonderful afternoon, everyone.
Thank you. Bye-bye.